We have a huge week ahead of us. We have to look at some of the indicators that are out there, some of the moving averages, to see where exactly we need to go in order to keep this Santa rally going for this last week of trading that we have in December. So we have some very key levels to watch. SPY, QQQ, IWM, Tesla, Nvidia, and then Bitcoin. I'm going to show each one of those in this video. So be on the lookout for these things on the charts. So first, the moving averages for the daily chart for SPY. Check this out. So we had the Fed not being too nice to the markets on Wednesday of last week, put us down below the 20, put us down below the 50. These are both simple moving averages, by the way. Got rejected off of that, came down a little bit lower, and then where exactly did we close? Now, this is really important. Let's see if I can make this big enough on the screen for you. Right now in the pre-market hours, you can see from Friday's close that we closed just below the 50. So the 50 was at this pink level here of 591.34. We closed at 591.15. So we closed down below that 50-day. We want to keep that level in order to see further upside from here. If we do break the 50, we got to watch out for that 20, which is near that round number of 600. So we want to be on the lookout for that. If we can get back up there, that can be actually very bullish for us for SPY, for the S&P 500. Those trading volumes that we got on Friday, very good trading volumes for us. Now, mind you, that was also a time where we see a lot of options closing during that time. Usually that comes with those monthly options. As a matter of fact, I think it may have been one of the triple witching days that are out there, being as though it was the last month of the year. So that usually happens on the quarters, if you will. So March, June, September, and then December. Usually you have higher than usual volume during that time. So you can see that happening. We do need to get back up on top that 50-day to have further upside. If we get rejected again, we want to be watchful for selling back down from that level, so we could potentially see some further downside. If we get back up above that, watch for 600, and then up above the 20-day is where we really have the further bullishness that could lead to more all-time highs for SPY. QQQ. We actually stayed up above the 50-day. I said getting down to that 50-day could be an area where we find that bounce, and we certainly got that yesterday. Trading, we closed down below the 20-day last week. So that's this blue line that you can see coming across your chart right here. And just up above that is where we are in the pre-market hours. We want to get up back on top that 20-day to once again see further upside, further bullishness for QQQ, tracking the NASDAQ 100. So IWM, the Russell 2000 stocks, what do we got for that one? Well, for this one, I'm going to have to put up the EMAs in just a moment here, but I did want to point out the 20, which is starting to get that negative slope, the 50 starting to flatten out, and so breaking down below the 20 and the 50, as you just said, we need to watch out for that 200 down below, which is all the way down at about 213, 214. So that's all the way, that's this orange line that you can see across here. We absolutely want to be watchful for that. I'm bringing back my RSI. For some reason, some of my indicators glitched out on me, so I want to bring those back. There we go. I got my volume 2 for this. Now, mind you, we bounced off of oversold for that one. Putting up the EMAs for the Russell 2000 stocks. Let me take down the SMAs so we can see a little bit more of that. There we go. We'll hide that. And one moment. Perfect. So you can see this green 5-period EMA coming across your screen down here. You can see that rejection we got off of that. This can be that sign of that near-term turnaround. That 13, which is yellow here, crossing down over the red, that can be bearish for us. So some things that we didn't have go too well for us on Wednesday of last week. Well, higher rates for longer and more economic uncertainty. Honestly, I think the Fed's stuck between a rock and a hard place. They can't raise rates for inflation. Now, mind you, higher inflation, not really all that good for Russell 2000 stocks. These are more interest rate sensitive companies, being that they are smaller caps. It's harder, more expensive for them to borrow money. So this is something that can be punishing to those small cap companies. And so you can see that punishment taking place on the charts right here for exactly what's expected coming up from the Fed. So mind you, if we see continued economic strength as we got good GDP numbers coming out, if the inflation tapers off for us, that's going to be a huge boon for the Russell 2000 stocks. We actually had some good news for the PCE numbers coming out. We see some more subdued inflation numbers that would make it easier on the Fed to consider cutting further rates. That could also be a very good thing to see, especially if we have that economic strength continue and also unemployment rate stabilize. The other side of things that the Fed, that they would need to raise rates in order to kind of tighten things, financial conditions, that to help tamp down the inflation rate that we see, but then they also really put the the unemployment rate at risk, or I should say the jobs market, to loosen conditions further than what they already have. So they're really walking a tightrope right now, really stuck where they can't raise rates, but they also can't cut them. They can't cut them because of inflation. They can't raise them because of the unemployment rate. So the Fed, like I said, in a tough spot, and I think that's why we saw that big sell. Russell 2000, need to see it get back on top of that green 5 period. EMA, we could potentially have a little bit more pain coming our way for that one. Unless it can get back up there, we need to watch and see. If we do, then it's all about getting back on top the 50, whether it's the EMA, SMA, they're right around that same level, the pink line and the red line coming across through here. Tesla with the EMAs, where we at right now, retracing a little bit, found support at the 13, as it found support back here at the 13, and we need to get back on top that 5-period moving average. If the 5 cross over the 13, that can be a near-term bearish sign. Watch for support at the 20-day, just south of $400 per share for Tesla. If we get back up on top of that, I think we have a real run back at that $500 level. We're going to have to watch for that again. This also not a great day Wednesday for Tesla, still being the interest rate sensitive parts of things. So despite the fact that there is all that Trump support from Elon out there, and that was a very good thing that for Tesla stock that led to this rise that we see, something that can still affect its near-term business would definitely be the pressure on the auto markets, auto loan markets, and then EVs also being a blooming and budding part of that. Definitely some difficulty there. We want to watch and see that 13 holds, get back on top of the 5 so we can keep racing up. If that fails, watch for the 20 down below. Nvidia, we have the 20 crossing down over the 50, near-term bearish sign. You can see that we already had that sell. If we can back up on top the 20, then we still need to get back up on top the 50. Now, mind you, on top the 20 also goes along with what we'd have for the Bollinger Bands. This is a 3 standard deviation Bollinger Band, and getting back up on top of that could give us some more upside, especially getting back on top the 50-day is going to be huge for us. For Tesla, we definitely want, Nvidia, we want to watch and see that we can get back up on top that moving average. That's going to be absolutely critical to get there. If I put up the technicals that I have on this, you can see that I was talking about a possible head and shoulders pattern, but we also have this support line down here. If we can't get back up on top of the 20, can't get back up on top of the 50, then it is possible that we fall back down below this neckline here. Watch the RSI, as the RSI right now is getting darn close to 50. Maybe we cross back up into bullish territory. We're going to have to watch and see. We do have to get on top of those moving averages to have further upside. If we get rejected instead, watch this bottom trend line. If that breaks, I think that's where we get that sell down to the 200. So close things up with the Bitcoin here for you. For Bitcoin, I said we could probably find support around the 50-day, and here we are, 2 touches on the 50-day so far, getting that bounce. Getting back up on top of the 20-day is going to be our big bullish sign, which happens to be just south of $100,000 per BTC. So that's something that we absolutely want to watch, that further push upward. And I think it's going to be that signal to our other cryptos that are out there. I heard a lot of talk of XRP. You might see, I guess you can't see it up in the tabs up here. Not quite ready to talk about that yet. I'm going to cook up the technicals to see if XRP is going to have that next run that sends it up over $4 per share. So right now it's kind of early, not ready to share it. When I do share it, it's going to come out over at the Discord first. That's available through the Patreon. You can also see my buys and sells over there. And then guys, also down in the description, find that link for Stockmo Academy if you want to learn to do technical analysis and also get access to the bread recipe trading strategy that I use personally in my trading. Stockmo uses and teaches through that course, and also tells exactly how to set it up, what indicators to use, what to watch for, where the buys and sells. Can't tell you what to buy or sell, but where those buy points could potentially be because the stock is about to take off, or where those sell points could potentially be because those stocks are about to drop, or whatever security or asset it might happen to be, such as even in the crypto space, highly dependent, by the way, on those technicals that are out there, especially when there's a very difficult way to fundamentally price in the value for each of those cryptos that are out there. Technicals play a massive part of that. And like I said, Stockmo Academy can teach you how to set that up. You can find that link down in the description. Guys, thank you for watching. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning. We'll see you in the next video.